What is up, you guys? Today we're going to talk about the balance sheet of a company, and I want to keep this video very short, very concise, and very to the point. There are already a ton of videos out there. They're going to teach you guys line by line what everything means, so I'm not going to go and do another one of those videos. I just want to talk about the single most important thing that I look at when I'm watching a balance sheet, and any stock that I'm looking to invest in long term goes through two stages. The first stage is just the initial analyzing, which is what you guys see here most of the time, where I'm just going through the balance sheet briefly. I'm looking at the income statement, I'm looking at the PE, and then I'm just kind of setting through a stock analyzer tool, whatever analyzer tool you want, and I'm just kind of throwing out some metrics I think the stock can hit. And if it looks like that stock is a stock I want to invest in, then from there I start looking at the actual company, looking at who is on the board, looking at who the management is and what they've done before. Is the founder still in the company, or is it somebody who had nothing to do with the finding of the company? How does the company make money? Not just like, oh, it's Apple, they sell iPhones. Like actually understanding how the company makes money, where the company is going, and where the market is going in the next 10 years, whatever sector that is. Those I don't normally talk about too much on this channel, simply because number one, those videos would take hours and hours. I'm completely cool with doing those if you want me to. And also I feel that most of the time my job is to kind of bring some stocks that I'm watching to your attention. And then from there, you guys do your analysis on if you want to invest in it or not. But there's only two things I really look at when we're first initializing a balance sheet. And that is going to be total assets versus total liabilities. These are the two most important things when I'm first looking at. Now, short-term debt is another thing that's very important. There's a big difference between short-term and long-term debt, which is very important to understand. Short-term debt is the highest priority for me, because if there's a ton of short-term debt coming up and they don't have enough to cover it on the balance sheet, that is definitely not a good thing. So you want to make sure that the short-term debt is not too high. But the major things that we're really watching here is total assets versus total liabilities. And the reasoning for that is we want to make sure, in my opinion, that we usually want to have a 2-to-1 or at least a 1-to-1 total asset to total liabilities. So in a perfect world, they would have 2-to-1, which means in the instance right now of Apple, which is a stock that we're looking at right now, Apple has $278 billion in total liabilities. In a perfect world, I would love for them to have $560,000 or $560 billion, as total assets, so that they can pay it off 2-to-1. But the very least thing that we need to have is a 1-to-1, which they clearly do. So what would be very bad and something I wouldn't invest in is if Apple had $278 billion in total liabilities, but only $100 billion in total assets. Now, yes, you could say if most of these liabilities are long-term liabilities, like you can see of the 278, 148 billion is long-term liabilities, which is not as bad. But if they had even half of that, it would be very worrisome to me. Now, the reason that I like to see this is for a couple of things. Number one, if something happens, like I don't want to say the word, but what happened in 2020 and the world is shut down, or a war breaks out, or something crazy happens, I know that the company can write a check tomorrow and pay all of their debt off, right? I want to make sure that they can cut a check, pay everything off. And I want them to have money left over. This is why I like a 2-to-1, because during a recession or during a market crash or during war times or anything that there is, that company can therefore, with all the extra money they have, go out and acquire other companies. They can go buy other companies, which will eventually end up helping the company in the long run. Because let's just say that you're a not lemonade stand, let's use coffee shop, right? Let's say you own a coffee shop on the east side of town, and there's a really good coffee shop in the west side of town, but that coffee shop has been trying to grow so fast. They've opened 4 other locations. They've taken on a ton of debt. They've hired 100 employees. They are trying to grow way too quickly, and they have a crap load of debt, and they're just struggling to, keep things above water, but they're growing at a massive rate. Then you have this company on the east side, which is your company, and you've been in business for 10 years, this company's been in business for 4, and you have a lot of money on the books, you're really good at managing your capital, and you're really good at managing your profit margins. You're still growing at half the speed, but we've talked about this in another video on my other channel, but you're learning to lock in your growth rate. And then the pandemic happens. I said the P word, whatever. The pandemic happens, the world is shut down for 6 months. Well, it doesn't, it sucks for you, but you have a lot of money on the books. You've been sitting back, you've been playing very conservatively. You might have $2 million in liabilities. Most of them are long term because they're leases and whatnot. And you have, $10 million across all of your long-term assets. So total assets would be 10 billion or 10 million, and your total liabilities would be 5 million. So you can write a check tomorrow in a worst case scenario and you can pay it all off. This person over here, this coffee shop owner who has all of these locations, might have $10 million that they have in total liabilities, and they might only have $1 million on the books, which means that if everything is shut down, they don't have the ability to actually pay to keep things running. So they go out of business. And what could happen is you might be able to come in and snake the company, might be able to pay them 500 grand or $1 million. This is on a really small, scale we're talking, but you might be able to pay them, hey, 500 grand, I'll take over all your company. Hey, $500,000, you're going to lose it all anyway. This is how I got started in real estate, mind you. But you're going to lose it all anyway. You're going to have to basically go bankrupt for the company. Let me just give you 250 grand to walk away. Let me give you 500 grand to walk away. Whatever that number is. Even $1 million. Give me $1 million to walk away. You know how to run the company. You know how to do all these things. And now you went from like 3 or 4 locations. Now you have 15 locations. And you were able to profit off of this person's poor excuse of using money or, raising capital and whatnot. So that's why I look for this so much, because not only does it allow the company to pay off all of their debt, but it allows them to play the offense in a time where everybody is playing defense. Just like Warren says, for instance, like, be greedy when others are fearful and fearful when others are greedy. It's the same situation, right? I always try to look at a company and look at you. If you're somebody who has a $500,000 mortgage and a $100,000 car loan and you're making $40 an hour, but you also have all of these bills and stuff, like, that's not good. You would rather imagine if you had no debt and you're making good money, and then the pandemic comes and you have the ability to play offense and buy up a ton of companies at super cheap prices. That's how you have to look at it. So I'm not going to harp on this too much, but guys, always look at your total assets versus total liabilities. If you want, go watch line by line videos. I've actually made a line by line video before. If you just go on YouTube, type in Peter DiCarlo balance sheet, you should be able to find one on the channel from earlier in the days. How to read a balance sheet for beginners. It only has 251 views, but it's a solid video. Go check it out. Thanks for all the support, guys. Have a great day, and I'll see you guys later. Peace.